The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady from EG Tax, and we're just here. We only got like 4 weeks left until the beginning of the year, and we want to make sure we get you so that you can take advantage of all the loopholes before there could be some major changes. And I am joined in studio with Chris Fabian. Hey Chris, how you doing?
Hello, Esther.
And you sound far away. Is that because you're in Florida?
I'm not answering that question.
All right. I'm Esther Gulius, the Tax Lady. 8030930, 8030930, star 930 on the cell phone. I know, Tiffany, you guys kind of took a little vacation here just before the end of the year. So Chris is in Florida, and we're here to answer your questions. We want to go over some of the projected changes in the tax law, because some of these changes, in the event that they get them past Congress, I don't know what's going to happen. And let's face it, the majority, if it holds in the Senate, is razor thin. And there have been a number of Republicans that have gone over to the Democratic side when it came to voting. So I thought it was important for you guys to have the heads up. I know Chris went over it a couple weeks ago and explains how some of the changes could phenomenally affect people, and I think it's important for us to go over again. Again, if you have questions, 8030930, 8030930, star 930 on a cell phone, and you can text us at 716-8030930. So first thing I want to do is talk about some of the things, and this is as of the Tax Foundation report as of October 22nd. So this is a very timely report, and this is all the information that we have based upon the Biden plan. And for those of you that have capital assets like stocks, bonds, real estate, have been thinking about using the stepped-up basis to inherit property for your children, this all may be changing, and so that's why I think it's so important for you guys to be aware of it. Chris, you got anything to say about that?
Yeah, no, just you got to listen to us, because, what they say is it's only going to impact the rich, and there's a lot of stuff out there that's going to impact the average.
Everybody, right. So obviously some of the big things is that rising tax rates from 21 to 28% on corporations. And so for those of you that, as this thing unfolds, if you've already had a loss in 2020 because things were so bad for your business, you just might want to defer some of the other expenses to 2021 because your rates could go up in 2021. So it's just something to put into your thinking cap as you're doing your planning. And again, if you have any questions, we offer absolute no charge help with your taxes. You can come into the office, we'll sit down with you and do a year-end plan. But this, like as we unpeel this onion, I think you'll find that there's things in here that should concern you. It's not just for people with incomes over $400,000. But again, those people that do have wages over $400,000, the FICA in the Biden plan would start again on wages over $400,000. So that would impose a 14.4% increase in taxes on that upper income person. But here's the thing that's so important is long-term capital gains under the Biden plan would be taxed as ordinary income. Right now, unless you're in the 15%, up until you get to the 15% bracket, how much do you pay, Chris? 0%. So with it being taxed as ordinary income, those of you that have stocks, bonds, capital gains, things of that nature, that you would pay taxes at an ordinary rate. So that's That's one thing. And so if you're sitting around with long-term capital gains and you thought, well, the maximum rate I'm going to pay is 20%, that isn't true anymore, especially if this passes, because you could be paying at 38 or 39% plus the state of New York. So that really changes the dynamic. So if you had capital gains of $1 million, the maximum it would have cost you originally is $200,000. If this change goes through, it costs you $396 on the federal alone. So
yeah, and don't forget the 3.9% extra Medicare tax.
That's true, and that's over and above that, right?
Yep.
Okay, we have a text question that came in from Akron. I will be severed from my current employer next month. That's sad. I'm 56. Am I able to take distributions from my 401k penalty-free after I leave my current employer? Also, I will be receiving a $193,000 lump sum retirement from them. Can I do a rollover to my 401k without having paying taxes? Well, first of all, if he does a rollover, direct rollover from the company to his IRA, I'm assuming that's all in a pension plan, so that will be completely tax-free and it won't be taxed till he takes it out. And again, other good news, because he's severing employment over age 55, there'll be no penalty for starting to withdraw his pension plan upon retirement. Right, Chris?
Exactly. Yep. So, yeah, you got to be careful, but you're the right age to do what you're doing, but make sure with your rollover, if you do get the check, you have 60 days to put it back into an IRA. So,
right. So don't you think the smart thing to do is, if he knows what IRA is going to put it into, that he would contact that IRA provider and say, this is my employer, and they would do a trustee to trustee transfer, so he doesn't have the access of the money.
Yes, the easy thing to do. Correct.
Okay. All right, and we're going to go to the phones. And again, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. I'm Esther Gilius, the tax lady, and we're going to Jean in Lancaster. Hi, Jean. How can we help you?
How are you? Happy belated Thanksgiving.
Thank you. I ate too much turkey. How about you?
I've been eating since Thursday.
I just threw out my stuff this morning. I thought
That's all right.
I just can't do it. All right, what can we help you with, Gene?
Yes, I got an interesting thing that happened. Maybe you've seen this before. Back in March of last year, I did my income tax by myself, sent it in on a paper copy, and I did a rollover for 2020 with the refund. And I expected, I didn't expect anything back. Unbeknownst to me, about 2 weeks ago, I received a refund check from the IRS for that amount of money plus interest, which I intended to use to pay my taxes for 2020. It was a substantial amount of money, and now I guess I'm a little behind the curve.
All right, so here's the thing. You wanted it to be credited to next year's estimate. And what they did is sent the money back. So what you can do is you can do a third quarter payment, estimated payment, and send in your estimate now. You could split it up into two payments. Actually, you're not that far off. So you could send in your estimate now, and that'll get you where you want to be. Or you can wait and pay the liability on April the 15th when you file your return, provided there might, and there's a 2210 that you can do to avoid the penalty possibly. So I would say, since you wanted to get those things paid in, I'd make sure I do the estimate now, and that you can call us. We'll help them with that, right, Chris?
Definitely. Yeah, we can give you a 1040 ES voucher, address to mail it into, and even if they hit you with the penalty because you didn't pay it early enough, we can help fight that next year too. Because
you'd have proof that you put on there that it was supposed to be credited to your estimate. So that's something that we could help you with in the event that they do penalize you.
All right, very good.
Okay.
I do have one more question, if I could.
Sure.
Let me ask you about the surcharge tax was it 3.8% above the amount?
Yeah. Mm-hmm.
is that to reach that plateau? That has to be. Does that any income to get to that plateau, or is it just investment income?
Chris, you want to answer that?
Are you single or married?
Single. 200,000 would be the.
100,000 is your limit. Yep, it's all your income. It's your adjusted gross income.
Just so everything. So all right. So if I just did very little investing, but if I got huge sums of money from my salary or from a pension, they would still activate that surcharge.
Correct.
All right.
Okay.
All right. Very good. Listen.
All right. Hey, thanks for listening, Gene. Appreciate it. I'm Esther Golias, the tax lady from EG Tax. We're going to take a short break. 8030930, 8030930, star 930 on a cell phone. We'll see you on the other side.
We are family. I got all my sisters.
And you know, at EG Tax, we think of you as family. I will tell you, if you have a question, don't rely on your neighbor over the fence. You want to make sure that you have the best tax help possible. In EG Tax, we will answer your questions at no charge. The end of the year is coming 4 weeks from now, and once the year ends, I mean, we'll all be happy when 2020 is over, let's face it. But there's a lot of you that have small businesses that maybe you have just been hanging on by your thumbnails, and you're thinking, oh my gosh, I think I lost a ton of money. Well, there's something called the net operating loss that you'd be able to utilize to take that loss against other income carrying forward, but you really don't want to produce any larger of a loss than you need to, and maybe it would be good financial planning to defer those expenses from December to January. But then, because maybe some of you might qualify for an earned income credit. We were just talking about that before the show, weren't we, Chris?
We were with unemployment and the wages, people being not working, and especially with unemployment, if they don't extend the time frame for it, there could be more people entitled to the earned income credit. So it might be worth it to go get a little part-time job. Any job's better than no job.
And to have a net profit, especially let's say you have a small business and you really think, well, if I pay up all my bills before December 31st, I may end up with $18,000, $20,000 in losses, but if I postpone this, I still have $5,000, $6,000 positive in my at my business, and you would qualify for the earned income credit, and you wouldn't pay. And actually, the earned income credit would pay your FICA. So there's planning tips that you want to do. And again, we absolutely, there's no charge. We'd be very happy to help you. We certainly want to have the bad stuff come to an end. We certainly want the bad stuff to come to an end. Moving along again with the Tax Foundation information, should there be either no majority in the Senate so that the Republicans might block some of the provisions that the Biden administration wants to come up with. The next thing that they're talking about getting rid of is the stepped-up basis, which really affects a lot of regular people. And so let me explain what a stepped-up basis is. When you inherit property, stocks, bonds, assets, and you inherited it, then the fair market value on the date of the death of the person who gave you the inheritance, that becomes what they say you paid for the asset. So if you inherit mom's house, and even though she paid $20,000 for it 70 years ago, and now it's worth $200,000, if you sell it for $200,000, you get a stepped-up basis. You pay zero taxes on it. Okay. They're talking about eliminating the stepped-up basis, which really could be a problem, because not only would there be no stepped-up basis, you'd have to go back to the original cost, but also many of you that have life estates would have to, again, go back to the original cost. Would be a big capital gain. And the thing is, it would be taxed as ordinary income instead of getting the preferential tax rate. So it's like a double whammy. So you want to really watch that one. And if you don't know what I'm talking about, please call us. We want to help you. Right, Chris?
Definitely. You know, stepped up basis is a big thing. I know we get calls about that all the time in regards to houses people inherit. And that's an average person that will inherit mom's or dad's houses.
Right, and that was one of the great things is that you could say to somebody, no, you don't have to pay taxes on a $180,000 gain from mom's house, and it's not going to cost you $60,000 in taxes. It's a benefit that is in the tax code. So that is something that is, again, Tax Foundation. If you just Google Tax Foundation and Biden's proposed changes, and again, right now, if the House stays Democrat, and if the Senate should go Democrat, or if some of the Republican senators go along with the Democrats, we could be looking at this stuff. So this is really important. And again, the tax year closes in 4 weeks, so you want to make sure that you've done your planning, right?
Right.
All right. And I have a text here. I want to read this. I inherited stock in 2007. Will I lose the fair market value on the date of death? When do I sell them? And that's, again, just exactly what we're talking about. Right now, there would be the stepped up basis. The law hasn't changed, but this is in the proposed changes. So
Right.
whether they would make it retroactive in the event that they did get it passed back to the beginning of 2021, we really don't know, but this is something that you seriously have to look at.
Yep, and I wanted to say something too. You said in the beginning of the show about the corporate tax rates going up to 28%, and then you mentioned NOLs. What's also written in there for corporations is the NOL is basically gone because they want a minimum tax rate of corporations who have NOLs of 15% of the profit for that year. So
That's right.
Care if you lost $5 million the year before, or even a smaller business like in Buffalo, we'll say somebody lost $40,000 because of COVID, and now for 2021 you made $30,000. They're still going to tax you on that $30,000, even though you have that $40,000 carrying forward loss.
But again, I want to put a caveat to that. That's what's proposed.
Correct.
But again, the whole thing is everything in tax law all ends on December 31st of a tax year. So we're looking at the close of 2020, thank God, here in 4 weeks. But should they go ahead and change all these laws in 2021, you might have shot yourself in the foot. So we want you to be educated so that you don't get stuck with your fingers in the cookie jar, so to speak. Let's go to Jim. Hey, Jim, how can we help you, sir?
Hello, Esther. How are you doing? Greetings.
I'm good. How's things in Arizona?
Arizona. Well, I'm watching flower buds and hummingbirds. But
Oh, how nice.
I wanted to pass on to the taxpayers was the fact that one of your callers talked about getting a refund check back. What they can do with that refund check also is put void in the endorsement section, send it back to the federal
Government.
center that sent it, and basically a letter can be typewritten and everything. It needs the taxpayer's signature and date on it, and just request to have it applied to the 2019 tax year.
Which is really a good suggestion as well. The only caveat to that I would say is they're still so far behind the 8 ball right now that
They are.
they're really running to catch up. So you just wouldn't want to get lost in the shuffle.
Well-
So to make sure, the 1040 ES is for sure, but not a bad suggestion as well. So I really appreciate
6 weeks.
that tip as well.
Yeah. But they'll lose the interest, but it'll go back to the original date the return was, if it was
That's
filed.
correct.
That'll
That's
go-
correct.
Okay.
Hey, thanks for calling. I appreciate the tip.
Do one sec.
I'm Esther Gullius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. You can text us at 716-803-0930. And wouldn't you agree, Chris, that maybe hoping that they're going to read a typewritten thing might be...
Yeah,
he's absolutely right. You can do that. But I will tell you, they are not on their A game yet. Would you agree with that?
Oh, yeah, I know with calling the IRS, they still say they have trailer loads full of mail waiting to process, and that's just, and that could be somebody's letter waiting from
Right.
from end of March,
Right, and that's the trouble. So you would send it over. If they don't open it up, then they haven't applied it correctly. Da 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 da. So, what our gentleman caller from Arizona said is absolutely correct. But in light of COVID and everything that's gone on, I don't know. I think the 1040 ES would be a better procedure. That at least you'd know. And again, like we said, we'd have the proof in the event that they did penalize you because of not making your estimates timely, that we could at least later on go back to them and say, oh no, this wasn't correct, and deal with it, because most of it would be paid in and paid in timely. So,
Yep.
okay, I got another text here. It says, is there no grandfathering in the stepped up basis? Well, first of all, this hasn't happened yet. This is proposed. And secondly, I understand that there will not be, but again, if you want to read it yourself, Tax Foundation from Deloitte, it's all in the Biden tax plan, so you can take a look at it yourself. But again, this is what's proposed. This is what it looks like it's going to happen, and we want to make sure that you understand so that you don't get bit on the butt, so to speak, right?
Exactly.
All right. So I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And we're going to, on the other side of the news, we're going to talk about the CARES Act and some of the other things that you have to understand. These did go into effect during COVID to make sure that everybody was as whole as possible, and we want to make sure that you know what to do. We're going to take a short break for the news. We'll see you on the other side.
We are family. I got all my sisters with me.
Hey everybody, this is Esther Golias, the tax lady from EG Tax. I'm joined in studio on the phone with Chris Fabian, who's kind of enjoying a little bit of a respite before tax season. And we got 4 weeks left in 2020. Everybody's going to be happy when 2020 is over. Hopefully the COVID vaccine is on its way and we can get back to doing business. But in the meantime, we want to make sure that you understand what's coming down the pike so that you're well aware and you can kind of make plans with your attorney in some cases, because like for instance, we were talking about the stepped up basis being potentially lost in the Biden tax plan. Maybe you would prefer to sell mom's house rather than having her inherit it. Why would that be a good idea, Chris?
Because then mom wouldn't pay no tax. Because as long as she's lived there 2 out of the last 5 years, the first $250,000 is tax free. So, and if you were to inherit it under the new tax laws, you get mom's basis. You sell it, so if mom's basis is $50,000, you sell it for $150,000. You got to pay tax on $100,000, where mom wouldn't.
That's right. So something that may become something that's popular is as people age, they think, well, maybe the better thing to do, rather than letting my children inherit the house, which would have gotten the stepped up basis should this all go through, if mom sells the house, then she would enjoy 100% tax-free sale, and then that's all been dealt with, so she wouldn't pay any taxes. So that's another way around it. And that, again, those are things that as this thing unravels, we certainly will keep you abreast of. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. And we have Carl. Hi, Carl. How can we help you, sir?
Hi. Yeah, I mailed my taxes in back in March for requesting a refund. And so far, I haven't heard anything back on it. I've called their hotline, the refund hotline, and punched in the information that they request, and they come back and tell me that they cannot provide any information about my refund at that.
Well, that's because, just like what Chris was talking about before, that they have trailer loads full of envelopes that they just haven't gotten to yet. What you might want to do is call the office on Monday, and we will do a 3-way call, talk to a tax advocate that is specifically designed to help tax professionals. And maybe what you'd want to do is send them that return electronically. Then you'd know that they have it, and you would get your refund in about 10 days. So that's what I'd suggest you do. That's absolutely a free service we provide. So if you want to give us a call, 632-7886 on Monday. Anybody else that's sent in snail mail, that's the problem with snail mail. You got to wait for them to open it up and key punch it. And if you haven't gotten your refund, we can certainly help you with that because we can file it electronically. Are we still open with electronic service?
Cancel the e-file because IRS has to update their computers.
Okay, so we can't even help them with that. But we can make that phone call to find out if they've started to process it.
Okay. Yeah, I've talked with them off and on through the summer, and that's what they tell me. But I just wanted to make sure I wasn't the only one.
Yeah. Yep.
Situation, then I can certainly wait. But what was your number again?
632-7886.
Okay, got it. Yeah.
All right.
Well, I'll check with your office.
All right, Carl. Have a great day.
Thank you. You too.
All right.
Much.
I'm Esther Gillies, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. Yeah, I'd forgotten. The IRS is updating their computers because even though it feels like tax season just ended, and kind of it did, we're only 4 weeks away from a brand new year and probably a brand new tax code. And so, and there's all kinds of things in the tax law that you want to make sure that you're ready for filing your 2020 tax return. And one of those would be the PPP. I hope those of you that have gotten the payroll protection plan payment that they sent out, I hope you have started your plan to have that loan forgiven, because if you don't do it, it has to go off to the Small Business Administration, who then would sanction that you have followed the guidelines of the PPP protection plan, and that would be turned into a grant so you don't have to pay it back. And Chris, is that something we help people with?
Oh, definitely. We can help you with it. I mean, even if you think, oh, well, I'm only going to get half of it forgiven, it's not worth it. That's still half of the money. If you got $80,000, that's $40,000. You don't have to pay back.
Pay taxes, right? Absolutely. And that's something we absolutely will help you with. So the procedure is you fill out that form for the PPP, it goes to your bank. Your bank then approves it to make sure it's been done correctly. Then it goes to this SBA, Small Business Administration, who says, oh, yep, this is good, this is good. Then they send you an official form, it's forgiven. So that money that would be taxable is not taxable. Well, actually, it's a loan, so that money you'd have to pay back. You don't have to pay back. So It's very, very important that those of you that have gotten PPP, that you get this process going.
Yeah, it's very simple. You send in your payroll reports, you send in your utilities, copies of your utility bills, and your rent. And then they'll go through, they'll review it, and they'll tell you everything, what was forgiven and what wasn't.
Right.
So,
and some of you have gotten $200,000-$300,000. I mean, you don't want to have to pay it back if you don't have to, right?
Exactly.
All right. And by the way, right now the wisdom is if you've gotten the PPP and you and it's turned into a grant, you cannot use that money to use as a deductible expense for paying business expenses, because it's money that they gave you that would be tax free. I know that I was reading something this week that there are a number of accountants that are asking the federal government to say it's tax-free and deductible, but right now it's tax-free if you apply to have it to fulfill the PPP requirements. It's tax-free, but it won't be deductible. So that would be the mindset I would use as I'm getting ready to close out 2020 if you're a small business. Okay, let's go back to the phones. We're going to talk to Jim. Hi, Jim. How can we help you, sir?
Hello, how are you doing today?
Good.
I'm really interested in your program. What I was kind of curious is that my income's dropped about $40,000 for 2020. Obviously, the stimulus I was not eligible for. I happen to be a little bit over. Now, by filing my taxes for 2020, would I be eligible somehow to receive?
Yes. So what they're going to do is they're going to let you use the 2019 figures or the 2020 figures, whichever would give you the opportunity to get the stimulus payment. So there will be a stimulus credit on your 2020 return, and since your income went down, you will get the stimulus with this year's return.
Okay, so when I file for, in other words, I've been working on my 2020 taxes, obviously, and I won't be filing until probably.
Right, but there will be a credit for reconciliation credit form on there to reconcile. And many people that might have gotten some stimulus might have gotten incorrect stimulus. So on the 2020 tax return, there's going to be a stimulus reconciliation credit that you would get. And in your case, if your income dropped, you would get the stimulus.
Okay, well, that's great news to hear. Then also, probably by lowering my taxable income, I'd probably be eligible for a lower Medicare cost because you go in steps.
Absolutely.
Yep.
Yeah, so therefore they will calculate that.
Absolutely.
20.
And that's why it's really important that you do that last minute check, because you don't want to shoot yourself in the foot and say, well, maybe what I'll do is I'll take money out of my IRA. There are so many benefits in the tax law for people that are on the lower incomes end of things that you just want to make sure before you do it that you check with us, because you don't want to shoot yourself in the foot. One good example, like Jim says, your Medicare costs go down. You didn't maybe qualify for stimulus last year, but you will. Many people that maybe never got an earned income credit before because their income was too high will get it this year, which is credit up to like state and federal, about $9,000, depending upon how many kids you got. So you want to make sure you don't shoot yourself in the foot. Give us a call because we want to help you. No charge.
One last question. You said shooting myself in the foot. Obviously, I was very generous, and I had taken money out of my IRA. But what I did was I did not take it out and touched it. I actually gave it to charity. So therefore, that probably will not show as taxable income because.
Okay, you had to do what's called a qualified charitable rollover.
Exactly.
Did you do that?
Yes, that's what we did.
Okay, so that is going to be on an IRA up to $100,000. You took it out of an IRA, right?
Yeah, I took it directly out of IRA.
All right, so you'll be good.
For 70 and a half.
Yeah, but see, they came out with the law after I'd done that, but obviously I'm still covered in the sense that I did not touch the money.
That's correct. But actually, they did give everybody the opportunity to put the money back. I think that ended like the beginning of August. So, but in your case, you did the qualified charitable rollover, so you're in good shape.
Charity, exactly. I gave it to a charity, so I wasn't going to take it back because I had already given it to the charity. So, but okay, that clears up a little bit of statements there. But thank you very much for that.
All right, thanks, Jim. Thanks for calling. I'm Esther Goulias, the tax lady from EG Tax, 8030930. 8030930, star 930 on a cell phone. And let's go to Bill in Buffalo. Buffalo Bill, how are you?
Fine, thank you. I have a question for you.
Yeah.
My wife and I are both in our late stages of life, and she has dementia, but we live in our own home. Is there any information or anybody I could talk to on direction on what I should do?
Do you have heirs that you have kids, Bill, or any other heirs that you wanted to leave your estate to?
2 sons.
Okay. So I would suggest if you want to call us as kind of an intro and we'll kind of steer you in the right direction. They are one of the other things that they're changing is they're looking to lower the estate exclusion. Right now it's $11,300,000. Before you'd have to pay any estate taxes. They're talking about lowering that to I think 3.8. I think it's 3.5 under the Biden plan. But you certainly want to make sure that if you want your kids to be inherited, you might want to sell your house as opposed, and then there won't be any taxes due. Even if they do the stepped up basis, your kids would be covered. So if you want to call us, we'll be very happy to look at everything, and there's no charge, and we'll refer you to an attorney. If you have your own estate attorney, that's great. We work with some wonderful ones, and we can refer you. Okay?
What's your number?
632-7886.
632
7886. The other thing is on our website, we have a, what's that called, Chris? Is it like a last will and testament letter?
Letter of intention.
Letter of intention. So on there, it tells you basically, I do a new one every year. It makes me feel good when it's all done. I think, oh, good, I can die now. But it tells you, it gives your heirs instructions as to where this is, where that is, where's the will, what's my passwords, where's all my accounts. This is what I'd like to be buried in that pink dress, and the whole thing. And it's right. I think it's under our Road to Retirement portion, isn't it, Chris?
Yep.
Okay.
Yeah, so you go to our website at egtax.com, Road to Retirement, and it's all there, and it'll help you out too. It's absolutely great.
What's your number again, please?
632-7886.
Thank you very much.
Thank you, Mr. Bill. God bless you.
Bye-bye.
Okay, I'm Esther Gullius, the tax lady. We're going to take a short break. 8030930, 8030930, star 930 on a cell phone. Our fax number is not our fax. Our email address is, it's our text address, 716-8030930. We'll see you on the other side.
We are family. I got all my sisters.
Hey, all of you family, we're so glad you're listening. I'm Esther Gullius, the tax lady, who ate too much turkey and pie and things like that this week. But we are looking forward towards the end of 2020. What a year it's been. We're looking for better things. But we want to make sure that we keep you abreast of everything that's potentially going down the pike. And so that's what today's show is all about. I'm joined sort of in studio with Chris Fabian. Hey, Chris.
Hey, I wanted to say the second last caller, was bringing up the Medicare cost, and I know a lot of stuff's going on with COVID, and if you get one of those letters coming, you should have got one already that your Medicare for next year is going up, and it was like a one-time event, something like that. We can help you fight your IRMA, your Medicare cost increase. Give us a call. Tim or myself can help you guys fight that, and hopefully.
So when you're talking about a one-time event, like let's say you sold a big lump of stock last year and made a bunch of money, and that was a unusual thing. What we basically do is we interface with the Medicare, Medicaid people, Medicare people, and say, wait, this is an anomaly. This is not their normal situation, and then they roll back that increase, right?
Right.
Okay.
Exactly.
All right, let's go back to the phones, and we're going to talk to Chris. Hi, Chris. How can we help you? Thanks for waiting.
Good afternoon, Esther. Happy Thanksgiving.
Thank you.
I have another question about the step up in basis.
Yep.
It seems to me that the arguments against eliminating the step up in basis are similar to those that are made against the estate tax. And I was wondering if in the president-elect's announcement that he wants to eliminate it, the step up in basis, that is, if there has been any indication that they will make a distinction between, for instance, someone who inherits a $12 million rental portfolio and perhaps someone who inherits a family home. It seems to me that such a consideration is given to the estate tax, considering it has limits. And it would seem only fair to have a similar limit on the elimination of a step up in basis.
So, here's the thing. Right now, nothing's happened. This is all somebody's brainchild, right? Before anybody can do anything, there has to be some, it has to go through the House and it has to go to the Senate for approval, then to the president. That's why I think it's so important that we talk about this now, because you're right, where you inherited grandma's house and the gain might be $150,000 is a whole bunch different than if you inherit the farm that's worth $150 million. So, those kind of things are valid. Right now, in what I'm reading from the Tax Foundation, there's nothing that's been addressed, but certainly when they're arguing what's going to happen, that's where you would want to contact your House of Representative in Western New York and your state senator and say, hey, this is a gigantic tax that would be put on the little guy, and that's what you said you weren't going to do.
Right. And does the proposal, this may be a question for both the elimination and the estate tax, does it apply to a spouse or just to children?
Well, this is the stepped-up basis would be gone, so it would be anyone who would have inherited.
No matter who, it doesn't matter.
Right. Well, again, this is all pie in the sky right now. So don't know what's going to happen, but from what I read, it would just be there would be no stepped-up basis for someone who inherits properties.
Okay. And one final question, if you don't mind. Would this apply to only property or tangible items, or would it apply to any cash inheritance as well?
Well, see, cash
If
is if it's just cash and somebody's already paid taxes on it, then it's not a problem. It would be mostly capital assets like real estate, stocks and bonds, things of that nature. Something where there was an intrinsic value that you haven't paid taxes on, that's what's going to be taxed.
I understand. Thank you so much.
Hey, thanks for waiting. I appreciate it. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. I mean, remember, I'm really glad that you guys are thinking about this because it is a big deal. Not only would the stepped-up basis be gone, but you'd have to pay taxes at the regular tax rate. So it's a double whammy. So this is very important. Wanted to talk, too, about stimulus. Remember, stimulus is tax-free under the CARES Act, but unemployment is taxable. So when you get ready to file your tax return, don't forget to include your unemployment. Right, Chris? Because it could really bollocks up the works.
Even the extra $600 you were getting, and then in September, the extra $300 you were getting. So all that extra counts as income, too. And that can, if you're not prepared, that could cost you money because the federal only withholds 10%, and New York State only withholds 2.5%. So New York State, the lowest tax rate is 4.5%. So you're already behind the 8 ball.
But again, and then there's ways around it because let's say when you're doing your year-end tax plan, let's say that you would be entitled to the earned income credit, but you got too much in unemployment, you might be able to put some of that money into an IRA to reduce your adjusted gross income. So that's a tool in our toolbox that we could help you with. Let's go back to the phones. We're going to talk to John. Hi, John. How can we help you, sir?
Yes, capital gains.
Yeah.
Joint return.
Yeah.
Capital gains. If I die, is the capital gain or the reset value set at 50% to the wife?
Okay, so if your wife is not on the stock to begin with?
Yes, she is.
All right.
Fine.
So her half is set, and if she inherits your half, then she'll get a 50% stepped up basis. But under the Biden plan, they're talking about no stepped up basis.
Right.
Okay.
Then when she would die, beneficiaries would
get it and pay taxes based upon your original cost.
Right. Now,
and that's why what's so important to me is people need to think about this, not only to talk to their representatives in Congress, but to make plans, because some people are riding on many, many, many years of capital gains.
Right. Now, on a traditional IRA, which is in equities,
that's different. An IRA is fully taxable when you take it out regardless because you've never paid taxes on it and it's taxed as ordinary income. What's being proposed is that capital gains will also be taxed as ordinary income with no stepped up basis.
Well, I guess all we have to do is wait.
Right, and talk to your representative. And we'll keep you abreast.
Thank you.
All right, thank you, John.
Right.
All right, I'm Esther Gulius, the tax lady from EG Tax. I got another text here. Do you think there'll be another stimulus check? I thought there was going to be a stimulus check a month ago, 2 months ago. I don't know. I mean, right now with everything going on in Congress and people, wondering about whether Trump is going to drop all the lawsuits, if they're going to proceed, if it's going to go to the Supreme Court. I think that I don't know if there's much. I don't think there's much will in the Congress to go through with this. I hope there is, because people are hurting. I mean, people that are small business owners and employees of small businesses are really hurting. Chris, you got a feeling for that?
I said this before on the radio. It's they both sides are saying we need to help people, but yet they can't come together. And that's what's sad. These are the people who are supposed to be representing us, who want to do what's best in our interest. And
wow, you are breaking up. It looks like whatever phone you're on is breaking up. So anyway, we 4 weeks till the end of the year. We invite you into EG Tax. We can do a year-end tax plan. Look at all what would happen if. We want to make sure that you pay attention to what's happening in Congress. I don't know what's going to happen. Looks like Biden is going to ultimately prevail. Those of you that are Trump supporters, I know you're hoping for the other. And I'm not saying I'm not with you, but looks like you got to swallow the bitter pill. You got to ask yourself, how will these changes affect me? Listen to Ask the Tax Lady. We will keep you up to breast as best as we can, keep you informed. Think about if this thing goes through with the non-stepped up basis and the sale of capital assets. If you sell them now and you're in the 15% bracket or less, you pay 0%. If we wait until this thing goes through, you would pay it at ordinary income. So that might be at 20 or 25 or 30 or 35%. So you want to make sure that you're smart and make sure that you tax plan, especially those small companies that are looking at a bad year. You maybe don't want to do the net operating loss, the NOL, because that may not work out in the best interest for you. But until then, if you need the best tax help, you can call EG Tax at 632-7886. Our website is egtax.com. And until next week, I'm Esther Gullius, the Tax Lady, with Chris on the cracking up phone. And we'll be back to serve you. Call us during the week and have a great week. And God bless you. And thanks for listening.